Is my voice audible to you all?
Yes, ma'am, we can hear you. You are audible.
I'm unable to hear anything. Just let me check out. Yes, am I audible, please? Can anyone? Yeah. Thank you. Yeah. Yes. Thank you so much. So today we are moving to the new topic, that is cash flow statement. As in the earlier class, it was discussed about the funds flow statement. Today we will discuss what is the need of cash flow statement. Why does it require to prepare cash flow statement? It comes under what, and what is the format? It is totally different from the funds flow statement, what we prepare in the funds flow statement. In funds flow statement, mostly we prepare like net statement showing changes in working capital, income from profit operating activities, and also from statement showing funds flow activities or funds flow statement. These were the three different statements we prepare in the funds flow statement, and there we will try to find out what are the funds that are coming into the organization and what is the impact on it on the balance sheet. Now, when we talk about cash, according to you, what is cash, and what do you understand by cash? Can anyone interact with me? Yes, please. Do you know what is cash? It's only an interaction one. Do not worry. So cash is a liquid form, yes, and with the help of which we will find out what is the cash inflow that is coming into the organization and what is the cash outflow that is going out of the organization. So when we prepare cash flow statement, it is purely about, according to accounting standard 3, we prepare cash flow statement. So the cash flow statement, we have two formats. One is the earlier one, which will be used to be similar as what we prepare in the funds flow statement. But we have an accounting standard number 3. Accounting standard number 3. In this accounting standard 3, according to AS3, we prepare cash flow statement. In cash flow preparation statement, we don't require any other statement extra, unlike we prepare in the funds flow statement. In cash flow statement, we prepare only one statement. In cash flow statement, we prepare only one statement only. Through the help of that statement, we will find out what is the cash inflow that is taking place into the organization in that particular year, and what is the cash flow that is taking place in that particular year with that help of earlier years. We will try to find out what is the cash inflow that was taking place in the earlier year and the present year. Does it is increasing or decreasing? So how do we find out that cash flow statement? Similarly, same as it is, with the help of our final accounts, that is trading account, profit and loss account, and balance sheet. With the help of these three account statement only, we will prepare the cash flow statement. Visibility all what I'm writing here. Yes, please give me the confirmation. Yes. Are you there?
Yes, ma'am.
That is the reason I'm going.
I think there is a
Next
network
one
issue,
is
ma'am. Your voice is not audible.
my voice is not clear.
Yeah, now
Am I
it is
audible
clear.
now?
Yeah, now audible.
Earlier it was not clear. Yeah. Give
Yeah,
me a
ma'am.
second.
Earlier it was not clear.
I'll repeat it again once again. Do not worry. Do not worry. Just I hope now is it clear? So in trading, we prepare in final accounts 3 accounts. That is trading account. Next one is profit and loss account. And the last one is balance sheet. With the help of these 2 accounts and 1 is I'll prepare cash flow statement. So now in cash flow statement, why we are preparing? Because we prepare final accounts to know what is our financial position. Are we earning profit or loss? Then what is the need for preparing an extra cash flow statement separately? Because whatever the cash related transactions, we take only cash and cash equivalent. Cash and cash equivalents, cash inflow or cash outflow. That related transactions with the what is the impact of this that cash related transaction will be come to known with the help of cash flow statement. Whatever cash inflow or cash outflow is taking place in the organization in that particular year, because of that cash inflow and cash outflow, is there any change in our financial position or financial statement? And with the help of which, even we compare with our earlier year with that of present year, is the cash usage or cash and the cash equivalence that is called, are we using more or is it increased or decreased? That will be come to know with the help of cash flow statement. Now I'll share a statement. Share the screen with you all. Is the screen visible? Yes, ma'am. Is the screen visible to you all? Okay. So please just look at here. This is the cash flow statement format. You can just see here, this is only empty format, only we have given you all. So here we have all together 3 cash flow statement is divided into 3 heads. The first one is cash from operating activities. Is the screen visible to you all? Please let me know.
No, ma'am. Screen is not visible, ma'am.
Screen is not visible. Oh my God, just give me a second. Now is the screen visible?
No, ma'am.
And it is visible. No. No sharing the screen, no?
No, ma'am. Screen is not visible.
Yeah. It's okay. It's okay. Give me a second. Give me a second. Yeah. Now my screen is visible to you all? Yes? Yes, it is visible.
Yes, ma'am, it is visible.
So this is the, yeah, yes, yes. So this is the cash flow statement. Under cash flow statement, we have three main heads. We have three main heads. Under that, the first one is cash from operating activities. What is this? Cash from operating activities. And the second one is cash from investing activities. Cash flow statement according to AS3, that is accounting standard 3, we have three heads. The first one is cash from operating activities. Second one is cash from investing activities. And the third one is cash from financing activities. Total trading account, profit and loss account, and balance sheet, whatever we prepared with the three statements, we are clubbing it and coming to three heads. The first head is cash from operating activities, cash from investing activities, and cash from financing activities. If you look at the format over here, which I'm sharing with you all, if you just look at there, after the three activities, we have opening balance of cash and cash equivalent. Just you first try to understand the format. I'm only discussing the main heads of the format. Okay. So the first one is opening balance of cash and cash equivalents. Next is cash balance of closing balance of cash and cash equivalents. So now let us try to understand and discuss what is cash from operating activities, what are the transaction or the items that fall under cash from operating activities, and what are financing activities, and what are cash from, and all these three activities, and we will try to find out. From that, we will add opening balance of cash and cash equivalents, and when you deduct it, you should automatically get the closing balance of cash and cash equivalents. So now let us check. Could you able to this format, another format which I am sharing to you all? Yes? Are you able to see the another screen which I'm sharing? The detailed format.
Yes,
Yes.
ma'am.
Yeah. So now just look at here. Cash from operating activities. So it is nothing but whatever we do in funds flow statement. If you remember, statement showing changes in working capital. I think you can revise that statement showing changes in working capital, all current assets and all current liabilities we will take there. And the difference will be either increase or a decrease in working capital. So first, the main most important point is to understand operating activities. You can just look at here. This is total format given over here is only operating activities. The screen which I am sharing here, that is related to total operating activities only, nothing else, only operating activities I'm sharing here. So the most important one to understand in cash flow statement, as I said, we have three heads. Under three heads, the first one is cash from operating activities. Under cash from operating activities, we will discuss first what all will come. Means it does not mean that all the time you have to do like this. Depends on the question given to us in the exam. According to that, we do it. Okay. If they have given like they have not given anything like operating profit directly, they are asking only given profit and loss account and are asking us to find out cash flow statement. Then from that we prepare cash from operating activities. So if you just look at here, net profit during the year. So whatever profit paid before tax deduction, the profit which we got before paying tax, that will be our first point written over here. To that we will add all adjustments for non-cash and non-operating items. To that we will add all non-cash and non-operating items. So what all are those that comes under this? If you can just look at here, if there is any change in depreciation, loss of sale of fixed assets, means if any assets are sold, when you sell it, any assets or investments, I'm not talking about the when you sell assets or investments, whatever amount you get. No, not I'm not talking about that one. When you sell any asset or investment, on that if you get any loss I am talking, okay, that loss will be added over here. Next, preliminary expenses, discount on debentures written off. So any preliminary expenses, I assume you all know what is preliminary expenses. Yes, the expenses which are incurred before starting or the in the process for starting the company, whatever expenses are incurred that are called preliminary expenses. And discount on debentures written off, that all will be taken. And goodwill, patents and trademarks or amortized, any reduction in value will be added to this. And also interest paid on long-term borrowings such as loans, debentures, public deposit, that all will be added. That all called as non-cash and non-operating items or non-operating expenses they are called. Non-cash or non-operating items or non-operating expenses, that all will be added to the profit before tax. Before paying tax, whatever profit is there, to that we will add these expenses. Is it clear till now? Yes, please. Are you able to understand till now? Any doubt with regard to this? Please let me know. Yes, dear. Is it clear? Yes, ma?
Yes, ma'am, it is clear.
Okay, okay, okay. If you are not understood any point, please you can stop me there itself. Again, I'll explain it. If I'm going a little bit faster, you can stop me there and then and there. I'll clarify your doubt. Okay. So we are still discussing about cash from operating activity heading only. We have not yet went to financing and investment activity. So here we are talking all this about profit on loss appropriation account. You might have prepared in funds flow statement, adjusted profit and loss account. That items only we are writing here. Next, we have less non-cash and non-operating incomes. We have added expenses and we are deducting incomes. So what are those incomes? Profit on sale of fixed assets and non-current assets, investments, interest, income on interest or interest incomes received or dividend received, rent received, any incomes which are non-cash and non-operating incomes. Why? Because these all are not. Operating means the activities which will take place to run our daily business, or the expenses or the incomes which arise out of day-to-day activities of business. Whatever business we are carrying on daily, because of functioning that business and during the process of carrying that business, what are expenses or incomes arise? Yes, that are called operating. And these are non-operating we are calling, means these incomes are not related to business. This is not our business. When we will receive dividend, dividend is received on shares. When you invest some shares or when you purchase shares of some company. So it is not our business. So all non-operating incomes will be deducted from the profit before tax. So for profit before tax, we are adding non-operating or non-cash expenses and deducting non-cash and non-operating incomes. And the difference is called operating profit before change in working capital. It is called operating profit before change in working capital. So before changing working capital, whatever profit is called operating profit before change in working capital. To that we are adding decrease in working capital. So what is decrease in working capital? If you remember your funds flow statement, there we prepare statement showing changes in working capital. In that only we are writing in the form of statement here. Okay. There it was separate statement, but is the inclusion of same statement we are preparing. So under the decrease in working capital, whenever working capital is decreasing, so when it will decrease? When decrease in current assets and increase in current liabilities. Whenever our current assets are decreasing and our current liabilities are increasing, then we call it as decrease in working capital. That will be added. And increase in working capital. Whenever working capital will increase, when there is an increase in current assets and decrease in current liabilities. So here, and one more thing, in funds flow statement, we used to take all current assets, means cash in hand, cash at bank, all will take, yes. But in cash flow statement, current assets means except cash and cash equivalents. Except cash and cash equivalents, all current assets will be taken. Then what are cash and cash equivalents over here? Cash and cash equivalents means the cash which is already in the form of liquid form. The cash such as cash in hand, cash at bank, short-term securities which can be immediately converted into cash. These are called cash and cash equivalents. So that will be not taken into current assets. In cash flow statement, whenever we are writing or preparing here decrease in working capital or increase in working capital, we will not take current assets into consideration. In what are those current assets will not take? Cash in hand. Okay, make a note of that if possible. While preparing cash flow statement, that too under decrease in working capital, we will not take the current assets. Those are cash in hand, cash at bank, and short-term securities. That will not be taken as current assets. So except these three, remaining all current assets will be taken over here. And that difference will be added or deducted depending on the amount we got. And that is called cash generated from operating activities. Cash generated from operating activities. To that, if we deduct the tax, then we will get cash from operating activities. So this is the first head of cash flow statement, that is cash from operating activities. So this is the first statement that comes under cash from operating activities. Is it clear, everyone, about cash from operating? Because it is very important to understand. In the question, they will give only profit and loss account, trading account and balance sheet. From that, you have to extract these all figures. It will be not mentioned over there. It is our work to extract that information and prepare the cash flow statement. And from that information, we have to extract the operating activities. Okay, this is cash from operating activities. Now, second head is cash from investing activities. So investing means in what do we invest in the business? Please, anyone can speak about that? Yes, please. Can anyone tell? In what, as a business person or business activity I am doing, in which type of investments I'll be doing? Where do I invest? Yes, where do I invest? What is investing activity or what is investment activity?
We can invest in any bank. We can invest in any
bank. Business. No, I'm not talking about outside. I'm not talking about outside. I'm talking about my own business. Do I invest in my own business?
Yes, ma'am. Of course, you can invest in your own business.
What in which type of where do I invest in my own business activities?
Capital, ma'am.
Capital, that comes under financing one. Means you are financing your business. So let us see here. I think the screen is visible to you all. Is it clear? Could you see the screen which I'm sharing here?
Yes, ma'am.
Yeah. Just look at that. Cash from investing activities. Means whenever I purchase any machinery, I'm investing. Yes, I'm investing where? I'm investing in machinery. Machinery is used for the business purpose. Yes, the machinery is used for the business purpose. So I'm investing in the machinery. So whenever I purchase machinery, it means I'm investing in the machinery. Any asset which is purchased, that is fixed assets only. Why? Because current asset does not come over here. Current assets comes in under operating activities. That too, increase or decrease in working capital will show there. Here it comes only about fixed assets. Even intangible assets also does not come, because intangible assets comes under where? Add or less under non-cash and non-operating items here. Cash from operating activities, it comes over here. In investing activities, we get only fixed assets. Whenever we are investing means whenever we are purchasing any fixed assets is an investing activity only. You are investing in any asset of your company, that comes under invest. Whenever you purchase any asset, is the cash coming to the business or going out of the business? Yes. Whenever you purchase any asset, does the cash is coming into the business or going out of the business? Is it clear what I mean to say? Is the cash coming into the business or going out of the business whenever you're purchasing any asset? You have to speak out.
It's money is going out of the business.
Yeah. So it is a negative figure, minus. Our amount is cash is going out. Whenever you are investing means cash is going out. It is nothing but here we write both minus and plus figures under head 2. Cash flow from investing activities. Whenever you are purchasing any fixed asset, cash is going out of the business. So you'll write that purchase of machinery, amount in the brackets or minus figure, or purchase of land, amount in the minus figure. Whenever you sell any asset, whenever any asset is sold, we will receive the cash. Yes. So that will be a positive figure. So proceeds from the sale of machinery or sale of land or sale of some other machinery, sale of plant, sale of freehold premises. Yes. Sale of motor car. This all sale of all fixed assets is an income to the, it's a cash inflow. Yes. It's a cash inflow. It means it's a positive figure. So in this head, we get both minus and plus figures both together. So whatever the difference means, here we take only assets, fixed assets only will take. Whenever you purchase, cash is going out, you'll put in the minus figure. And whenever it is a positive figure, and we'll put in the plus figure. So here we have cash inflow and cash outflow. Yes. So here, whenever you purchase any fixed asset, it's a minus figure. And whenever you sell any fixed asset, that is a plus figure. And whether it's a minus or plus, depending on that, we write the remaining balance of amount is called net cash flow from investing activities. What it is called? Net cash flow from investing. This is the second head. This is the second head, that is investing activities. Next we comes that is cash flow from financing activities. The third head is cash flow from financing activities. So what does it comes under financing activities? See, we have done with the profit and loss account, that is all non-cash and non-operating items. And even we have done with the fixed assets. We have done with the current assets, and we have done even with the intangible assets. Why? Because intangible assets comes under operating activities under the head non-cash or non-operating items. Yes. And fixed assets, we have written under investment activities. Even current liabilities also we have written under cash from operating activities. Yes. So now what is left over? Please tell me. What is left over? Can anyone tell me? From trading account, profit and loss account. Yes, what is left over? Little louder. Yeah. Financial activities means what I'm telling, what are information we are retrieving from the trading account, profit and loss account, and balance sheet only. Am I right? Yes. Yes, so now, which transactions are left over out of these three statements? Can you tell balance which sheet, transactions are left over? Balance sheet. Little louder.
Balance sheet is left over.
Balance sheet we have written, na? Fixed assets we have written. We have written current assets we have written. We have even written current liabilities also. What else is left over? We have left over with capital. We have left over with the shares. We have left over with the long-term loans taken. We have left over with the debentures. Means through which the company is getting the finance, from where the company is getting the source of finance to run the business activities is called financing activities. That is called financing activities. So this is what is the format. And financing activities, whenever we are issuing shares, yes, it means capital is coming, cash is coming. Issuing shares means cash is coming. It's a income. So it will be the positive figure. Whenever you are paying amount, any amount redemption means repaying of debentures or any amount is there, that amount is cash is going out. So it will be negative figure. So whenever you are paying the debentures, it will be repayment of shareholders or repayment of preference shareholders or repayment of debentures. That is a cash outflow. So here, whenever you are issuing shares means cash is coming into the business. It will be a positive figure. And the difference of that will be net cash flow from financing activities. When you add these three, that is cash from operating activities, cash from investing activities, and cash from financing activities, that difference, either it will be increase or decrease. It does not mean that always you should get positive figure only. You may get even negative also. If it is a decrease, the negative figure, decrease in cash flow. It's a positive figure, then it is an increase in cash flow. To that, we will add cash and cash equivalents at the beginning of the period. Cash and cash equivalents at the beginning of period means normally we prepare cash flow statement whenever we have 2 financial years information. Whenever we have 2 financial year information, then only we can prepare the cash flow statement. So here cash and cash flow, cash and cash equivalents at the beginning of the period means here cash and cash equivalents means what I said, cash in hand, cash at bank, and short-term securities. If you add that 3 to the increase or decrease in cash, you should automatically get the cash at the end of the period or cash and cash equivalents at the end of the period. Then we will, that is called cash flow statement. Is it clear? Yes, please. Yes, ma, is it clear?
Yes, ma'am.
Okay. So in the next class, we will discuss how to do the problems that are related to the cash flow statement. Okay. Yes, please. And we'll share even the, you can take the screenshot of the formats. I will share again the next class, and we do even the problems also. Okay. Thank you, ma. You can all leave the session.
Oh, okay, ma'am.
Thank you.
Thank you, ma. Thank you. Leave the class.